Hi class, today we are going to talk about the American dream. So what is the American dream? The American dream traditionally is you get out of college, you work hard, you meet somebody, maybe you get married, you want to raise a family. Where do you want to raise that family? You want to buy a house. The American dream is to work hard, raise a family, and buy a house. So today we're going to talk about just how do people buy houses in America. And traditionally what people do is that they work hard and they save money, but then they also get a loan from a bank or a lending institution. And that loan that you get from a bank, we call it a mortgage. Now a mortgage, the first thing you have to know about a mortgage is that T in the word is silent. So it's just mortgage. And what a mortgage is, like I said, it's how much money a bank will loan you. So let's say, for example, that you want to buy a house and the house costs $200,000. Now you probably don't have $200,000. So you go to your bank and you say, will you loan me money so I can buy this house? And the bank will say, of course, but we want you to put some money down, and we call that a down payment. And the down payment is how much you take out of your savings and give to the bank. Traditionally, the down payment was about 20%. Nowadays, people have down payments of 10% or 5% or even less. But traditionally, the bank wanted a down payment of about 20%, and that way you share the responsibility with the bank. The bank will give you money, but you have to put in money. And that way both the bank and the borrower are sharing responsibility for this house that you're buying. So let's say that the down payment is 20%. 20% of $200,000 is what? $40,000. So now the bank will loan you the rest, and they will loan you $160,000. The $160,000 is called your mortgage. Now usually the mortgage is going to be 30 years or 20 years, sometimes 15 years. There is also interest. The bank makes money by charging you interest. Traditionally, it has been 6%, 7%, 8%. And so you pay a monthly mortgage. We say a monthly mortgage. Or someone might say, how much is your mortgage? Well, I pay maybe, this is just an estimate, but maybe I pay $1,200 a month. So if you pay $1,200 a month, what you're doing is you're paying back the bank, but you're also paying them interest. So we call what you owe in your mortgage is the principal and how much interest you pay. Together, that's your monthly payment or your mortgage. Now, what happens if something really bad happens and you cannot make your payment? That's really bad. If that happens, then the bank will say, I want the house back. If you can't pay, I'll take the house, I'll sell it to somebody else. So what the bank does is it forecloses, or you have a foreclosure. That means you cannot make the payment and the bank takes back your house. Whew, yeah, that's really not good. So when you get a bank loan, you have to be very careful that you can make the payment. And there's many different kinds of loans. One is called a fixed rate mortgage, and that is the safest. Let's say that your payment at 6% interest is $1,200 a month for a 30-year fixed rate mortgage. That means that for every month for 30 years, your payment will always be $1,200. But let's say that right now you cannot afford $1,200, but you can afford maybe $1,000. So the bank might say, instead of 6%, we will give you 5%. But next year it will go to 6%. And maybe the next year it will go to 7%. And that's called an adjustable rate mortgage. To adjust means to change. And so many people do this because they think, now I'm young, I will be making more money in the future when my business really gets going, and I will be able to afford more money. And it's very common too. The problem is that you have to make sure that whatever loan you get is a loan that you can handle financially. Because the dream of owning a house, while it's something that everybody wants, it still is a very responsible decision that you must make. But it's something that we all strive for. Okay, thank you very much, class. Talk to you soon.